Welcome to the trading exercise. This exercise teaches the required skill set needed to become a successful trader. Complete this exercise in simulation only. The trade signals aim to work 60% of the time. So if the above happens and I go through a series of 50 trades, then this should be the outcome. 50 trades using 3 contracts. The average loss would be $150. The average win would be around $300. Number of winners, 30, comes to 9,000. Number of losers, 20, equals to 3,000. Commission on 50 trades, around $250. And net profit after the losses and after commission is $5,750. 50 trades will roughly take you about a month and a half to 2 months, or depending on some people 3 months, depending how often you're in the trading room and how busy the markets are. Trade entry. These signals are called and marked with plenty of time to place your orders to either buy or sell at a specific price. Once the signal is called, place your buy or sell order accordingly as the limit order at the price. If the signal gets cancelled, remove your limit order and wait for the next signal. As we're coming into a trade area, I'll let you know that we're coming into a trade area. I'll let you know what we're looking for, and when I actually call the signal, I'll give you a specific price to put your limit order to buy or sell. There'll be no guesswork. As soon as I say the price, you just click the button and put your entry on as a limit order to buy or sell at the price. Now automatically the stop and the profit targets will be put into place. The stop loss is 1 point from entry. This is the optimum point at which the possibility of the trade working is diminished. If the initial stop loss is 1 point, but once you are filled and the market moves in your favor, that gives one candle in that direction, move the stop loss to the lowest or highest candle against your position. I'll show you how to do this in the trading room a little bit more. We take what's called PowerPoints, sometimes without any confirmation from anything else. And this last sentence is made for that. So what happens is sometimes we get hit and filled straight away and the market will go in our favor. Instead of leaving our stop loss at 1 point, we'll move it up to half a point sometimes, 3/4 point sometimes, just depending on how well we got filled on that particular trade. But what I found is 1 point from entry. As soon as we take the trade, the best trades always take off straight away. So there's no need to give it a 1.5, a 2 point stop, or any room in the trade at all. So that's the reason some people think, wow, 1 point is very short. It is, but from my experience, if it hits 1 point, normally it's going to hit 2 points. There's no need to have a bigger stop. Moving on to the profit targets. Taking profit when the market makes it available is critical to your success. Just like the stop loss, we must have a way of taking profits. Now with this exercise, we'll have multiple exits. We take one contract off at 2 points, which equals 8 ticks. We take another contract off at 2.5 points, which is 10 ticks, and one contract off at 3 points, which equals 12 ticks. Or as the moderator instructs. Sometimes the market will come up and will take us out for 2 points and 2.5 points, and the market might be going sideways, coming back down. And the other markets will actually tell me that this trade is very unlikely to work, and in that case what I'll do with the third contract, or even sometimes with the second contract, I will take them out depending where the market is. So not all the time I'm going to stick for the 10 ticks and the 12 ticks on the second and third contracts. Sometimes it'll be different. But during this exercise, the idea is modeling yourself around what I do to give you the best chance of becoming successful. So as soon as I do something, you follow it. The maximum drawdown for any one day is 4 points. If you hit this drawdown, stop trading until the next day. If for some reason I have 4 losses in a row, and that's what 4 points is, that's 4 losses in a row in any given day, that means a couple of things. Either the market is playing up and we need to just stop, or secondly that there's something going on with me and I'm calling the signals wrong, or something's not quite right. So the bottom line is, I found if I have 4 losses in a row, it's much better if I just stop and move on to the next day, because everything's much clearer. And 4 points, that's like one and a little bit of one trade, one winning trade to recover, maybe 1.25 trades to recover the particular 4-point losing day. 4 points is easily recovered. If it turns into 8, 10 or 12, what I found sometimes that if you don't have a maximum drawdown, it can be very devastating, and it can take you a week to recover just from simply not having a rule in place. So I have a 4-point rule. If I'm down 4 trades in a row, I will stop and come back the next day. Accepting the risk. You must know in advance exactly what your risk is on every trade for the next 50 trades. Knowing the risk and accepting the risk are two different things. You need to be comfortable with the dollar amount you are risking, as you could lose on all 50 trades. This is obviously the worst case scenario, and considering you could win on all 50 trades also is just as unlikely. When you start this exercise, and we're doing it in simulation only, the first thing, you won't have the emotional fear factor of actually losing money. Because it's simulation trading, there's no real money at risk. But what you will do, you will find that you are getting emotional with the market. You are hoping that the trades are going to work. And when you go on to real money, you need to accept that you can't tell which trade's going to work. You can't tell the winners from the losers. They might look exactly the same, but the outcome of any particular trade is uncertain. And this is one of the most difficult things in the market. So what we do, over a series of trades, we know what's going to happen. And accepting the risk, you've got to know how many, over that series, say if the series is 10 trades or 50 trades or whatever it is, that you could lose every single trade, which is very unlikely. But if you're comfortable with that amount of money to be lost, you'll never have any problems taking the next trade. Okay, moving on to executing the exercise. The rules are simple. Trade the system exactly how they have been designed without diverting at all. The system sounds easy, but it's not. If you ever traded before, it will come in direct conflict with your desire to trade objectively and come into conflict with your beliefs about the market. So basically what I want you to do, this is an exercise for simulation, purely for beginner traders. I want you to come in and model everything I do for the next 50 trades. That will give you the best insight how to make money. There's a few problems that you'll have when you first start, and one is you want to start doing things yourself. You want to start taking trades and letting them run a little bit further than possibly I will. Or sometimes you're feeling uncomfortable in the trade and you think it's a good time to get out when it's not. Taking the first 50 trades will get rid of all the initial mistakes in the market that you possibly could make. So basically what I say is model exactly what I do for the first 50 trades. Obviously then it'll give you a better understanding of how the market works, how the trades work, how you react to certain situations. And once you're comfortable with all that, you can write your plan to start trading with real money and follow your system. Initially this system I tell you to follow is mine, but when you go to real money I can't advise you what to do. But while you're training, this exercise is excellent. It teaches all the required skill sets that you need, and it starts you on the path to being a successful trader. Okay, that is the end of this presentation. Thank you.